Hey, welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about how to use annuities for long-term care planning. I've talked about this before in past videos, but I want to dive into it again because I get a lot of questions about how to best prepare for long-term care. Okay, so there's 3 things that you can do, and I'm going to share my screen and actually show you what these options are, how much income you can get from them, and what the long-term care benefit looks like to you, and probably just some things to think about as you kind of work through your long-term care planning strategy. Okay, so one of the, I would say, classic ways to buy an annuity is through just a regular long-term care policy. And this is done through life insurance companies now. Okay, things have changed and shifted over the last 10 to 20 years. And really, when you're setting them up, it is a long-term care policy, but it's done through a life insurance policy. Okay, I actually have a team that takes care of those for me, and we work with companies like Brighthouse. You got Securian; those are probably some of my favorite to work with. But you have some others as well, just depending on your situation, where it might be best for you. And if you're married, maybe for your partner as well. Okay, so that is one way to do it. And I have a very specialized team that actually works on those for my clients because they are so specialized, and you have to do full underwriting. So if you're healthy, it might be a great thing for you. Okay. So another way to do it, and we're going to be talking about this way, and I'll be showing my screen about these, is using annuity contracts. Okay. Annuity contracts that have doublers. Sometimes they'll double it, or sometimes they'll give you 1.5 times your current lifetime income for long-term care. Okay. And there's just different rules as far as joint versus single and different strategies to use for these. And you have to understand how they work. Okay. And I'm going to show that to you. And a third option is actually using another annuity, but it is not for lifetime income. It is strictly for long-term care, but it's really, really good as well. So I'm going to show that to you last. Okay. So anyways, I'm going to dive in here. If you have questions about annuities, you can reach out to me. You can comment below. If you want to check out my annuity calculators, especially for lifetime income, I would recommend the Income Rider. Go to my website, johnstevenson.com, and you'll be able to do that there. So anyways, all right, let's dive in. I'm going to share my screen. Okay, so just looking at, these are just the bare bones Income Rider annuity contracts. You can buy a SPIA and a DIA, and those give you lifetime income, but they don't give you any LTC benefits. Okay, so we're going to look strictly at the ones that give you the LTC benefits. Okay, and these are the Income Riders. Okay, I'm going to base this off of someone, they got $500,000, they're single, and they're 62 years old. Okay, and let's say they want to take income in 5 years at 67. So based off of that, we can see F&G is the highest lifetime payout, and they also happen to be the one that gives you the long-term care benefit right here. When you see enhanced payments, those are the ones that'll give you this. Now, some of these do not offer that. You can see Clear Spring doesn't, neither does Delaware, and Corbridge does not either. Okay, but Aspida does. Aspida offers it, so does Equitrust. And Nationwide does not. Nassau does not. This particular one with American Equity, they don't. And then you've got a few of these. Actually, no, that one doesn't. But Midland does. Midland is great. Probably one of my favorite companies to work with because they were one of the first companies that actually allowed people to use these benefits for in-home care. A lot of these other companies will focus on only giving you those benefits if you're confined to a nursing home. And people are like, well, I don't want to be confined. I might want to just pay for care at home. Okay. So it's nice to be able to do that too. Midland is known for allowing that. Okay. Anyways, you go down the list. I mean, you can see, yeah, Global Atlantic offers it as well. So not all annuities offer it. So you have to kind of realize which ones do. And so it just so happens that F&G does. So we're going to look at this specifically and see how this would work. So I'm going to go in here and I'm going to look at, and it'll show me the lifetime income. It'll also show me the LTC benefit. Okay. So we're looking at lifetime income. So lifetime income lasts forever, okay, which is great. And the account balance does not last forever, okay? This is something we need to talk about because this is strictly related to the LTC benefit, okay? So when you're looking at regular income annuities with income riders and you have an LTC benefit, they are just a liquidation benefit, okay? They are there to liquidate your account faster. Your account's already going to be liquidated. You're taking lifetime income. I mean, you're basically spending $500,000 for a $1.6 million pension. Okay. That's what you're doing. But what you're also doing is you are providing yourself a lot of LTC benefit. So the LTC right over here, see enhanced lifetime withdrawal, they double it. This is for a single payout. Okay. If it was a joint, most of them will do just 150% of it. Okay. So you got to remember that. So it might be like 80 grand if you were married. So, and they'll give it for up to 5 years. So that's the other thing. They'll give it for up to 5 years or until your account balance runs out. So if something happens, like let's say in the earlier years, you cannot do 2 out of the 6 daily living activities, then you're going to be able to activate this $112,000 a year in income, and it's going to deplete your balance pretty quick. So that $458,000 is probably going to be depleted in like 4 years or close to it. And so when it gets depleted, the available lifetime withdrawal, which of course is still $56,000, it reverts right back to that because that is contractual and guaranteed for the rest of your life no matter what. Okay, the LTC is not. That is just there to give you the money when you need it the most. So one problem you might be seeing here is the fact that this LTC benefit runs out when you're like 75, and most of us don't need long-term care until we're in our 80s. Okay, it's not saying that's the case. This is a nice benefit. It is nice to have, but it's really for the early years of the contract. Okay, so if you were thinking about, well, I want something that's, give me that benefit later, then here's what we're going to do. We're going to scroll this out further. Okay, let's say 82. Now it's going to show different companies because different companies are better for different deferral periods. All right, so we're looking at the highest income available at age 82. Now what we want to do is we want to do enhanced payments, okay? I'm going to show you all of the companies that only give us enhanced payments. Okay, we've got American Equity. This one actually, so this particular one will do it. Let's see what it actually looks like. All right, so you can see here, available lifetime withdrawal at 82 is $161,000 guaranteed income. That's for the rest of your life. So you might just use that for long-term care and that's it. But they do have a little extra benefit. You've got some money in the policy. So it looks like they'll give you $323,000 for 3 years. And then after that, it's gone because there is no more account balance here. So again, it's a liquidation benefit, but it is something where if you want to defer taking income, lifetime income, and you're okay with doing that, it gives you a little extra on the back end for LTC. So let's say you decide, well, I'm only going to activate this when I need LTC. Well, you can do that. And if you need it, you can double it right then. And of course, at this point, you're getting $323,000, which is great. I mean, it's definitely a decent amount for long-term care because it can get really expensive, but it's only going to be for a few years. And once that runs out, once the account balance runs out, then the available lifetime withdrawal, which is $161,823, that is what you'll be given for the rest of your life. Okay. So anyways, it's still a very good strategy, but you may not want to put 500 grand. Maybe you'll only put like 100 or 200 grand in here. So this is a great strategy for taking lifetime income coupled with long-term care benefits. Now, if you want to have a policy that is only based on long-term care, then I would recommend Equitrust. Now we're talking about an annuity policy. Okay, I'm not talking about the life insurance ones. If you want to do those, you have to set it up, and it's a true long-term care policy with a life insurance company. Which all of these are life insurance companies, but these are life insurance contracts. Okay, so what we've been looking at right here are asset-based contracts. These are annuities. These provide lifetime income. These provide a doubler for LTC care, but at the same time, maybe it's not what you're looking for. Maybe you're thinking, I don't want to put that much money in, but I still like a decent amount of income if I need long-term care. Then what I would recommend is looking at Equitrust. All right, so let's look at Equitrust. Let's say they buy this at age 65. Okay. Now, if they put in, I don't even know, I can't even illustrate that far. $317,000 total LTC benefit, $1.5 million. It's tax-free, but you have to put in non-qualified money. So that's the catch. But you're getting $300,000 per year guaranteed for 5 years, and it's tax-free. That's pretty good. So, but that's only with $317,000. That's not the 500 grand we were looking at. That's pretty good. So if you're thinking, I just want only long-term care, and I want it guaranteed, for 5 years, and I want it no matter what age I decide to take it, I want it to be there, then this is the best option. Okay. The nice thing about this particular policy is you cannot be denied, even if you got bad health. So you will have different risk class. So you have to be pretty unhealthy to get like the lowest. So if you got the lowest, the income's not going to be as high. So do you secure? The worst case scenario is your total LTC benefit will be $660,000 based off of 318 grand. So that's not very high, but at least you're going to get $11,000 a month guaranteed tax-free income for 5 years. Okay. Now, most people do not get secure. You have to be really, really bad shape in order to get that. Okay. Standard, a lot of people don't get standard either. Most people will get preferred. I'll just let you know, most people that do this, they get preferred. But I just want you to see, just can have full transparency here, that some people, if they're unhealthy, then they're going to have not as much income. But still, it's not bad. Almost 17 grand per month in tax-free income, okay, for 5 years. That's really good too. So, of course, we want preferred. You'll probably get preferred. Most people do, but you don't have to put in 318,000. You might say, you know what? I only want to just drop 100K in here, or 150. Let's say 150,000. All right. Well, that's a decent amount. Now I get almost 12 grand a month, tax-free. Great. I'll take it. And this is based off of claim age of 85. What if you don't need it till like 88? Okay. Still the same amount. Okay. What if it's 92? Same amount. Okay. So let's go back to 75. Okay. See, it's a little bit less. So as you get older, they do raise it up to that. See, it goes up a little bit higher. Let's see, go up to 81. It gets to a point where it levels out and then it stays where it is. Let's just see here. Yeah, see. So it looks like 85. 85 is the age where it hits that high mark, because most of us, when we need long-term care, it's going to be in our mid to late 80s anyways. Okay. So this is what I would recommend highly if you are looking for tax-free income and you want to use non-qualified funds and you want it strictly for long-term care. Okay, this cannot be used for any other purpose. Now, if you were not to use it, you're going to get whatever the balance is when you die, will go to your beneficiaries. Or I guess if you want to cash out, you can do that too. So it does give you that flexibility. But you can see the benefit here is you're just giving yourself peace of mind. Okay, you're buying a policy, it's set up, you don't have to worry about it anymore. And then if you want just the highest lifetime income, then go back to the other annuity calculators that I have, the income riders, and you can throw in whatever money you want, and you can take income a whole lot easier. You might say, I want to start taking lifetime income right now, and I want a long-term care policy that's separate for that, something that's guaranteed to be there, because these other ones I know is not going to last till age 85, right? These LTC payments. So you can set up the lifetime annuity for guaranteed lifetime income plus LTC benefits in the early years of your retirement. And then you buy the policy with Equitrust to give you guaranteed LTC benefits later. So it's kind of a perfect combination if you wanted to do that. And they don't really do underwriting, not like some of the the life insurance companies that we deal with. There's a full underwriting when they actually approve you for those. For Equitrust, they're asking you questions and they get you on a Zoom call and they make sure you can stand up and walk around. So it's a lot more simpler than some of the other companies we work with. So I hope this helped. I just wanted to dive in a little bit how this works, because people ask this all the time. They're like, how do I do this? I'm like, well, there's really only a few ways you can do this. You can buy a life insurance policy that has a long-term care rider on it, and it's a true long-term care policy. Or you can buy an annuity contract. You can have lifetime income, and they'll have a doubler effect on there for you. So it'll give you a little extra income when you need it the most, but it doesn't last very long. It's just in the beginning of the years. So it's great for lifetime income, but not so great for LTC later on. And then you got Equitrust that gives you guaranteed tax-free income, and they have a very lenient underwriting standards, and you're guaranteed to be approved. That's really nice to have that too. So it just depends on you, your situation, what you're looking for. So if you are interested in an annuity, I would invite you to book a call. There's a link below this video. You can reach out to me that way, or you can go to my website, check out the annuity calculators, and you can book a call with me there. But I hope this video is valuable. I know it's a little bit longer than some of the ones that I do, but I wanted to dive into this a little bit deeper and show you how these work. And I'd be happy to answer your question and be happy to meet with you if you're looking to purchase an annuity for yourself. So anyways, hope that helps. If you do like the video, make sure you like, subscribe, share, make sure you comment below, and we'll see you next time.